Has Abenomics run its course?
Well, I think it'd be maybe a little bit unfair to say it's run its course. I mean, we're still underway in what's going to be a massive programme, which I think most people anticipated would take a few years. And we are seeing some inflation, which was the key reason behind Abenomics. But what we've just seen is we've hit a bit of a stumbling block. We saw growth in the fourth quarter, much lower than we were expecting, only 0.3% on a quarterly basis. On an annualized basis, that's only 1%, much lower than the 2.8% figure. And I think what we've seen this morning with the increase in this lending scheme, doubling one of the schemes to 7 trillion yen and extending both by an additional year, just shows that the Bank of Japan is willing to be reactive to how the economy is reacting to its massive fiscal and monetary stimulus program. And we can't really be too surprised about this. I think people were expecting it to wait till April and then increase its asset purchase, which it may still do once the sales tax hike comes into place.
Right.
But I think it is a positive thing that they are willing to react.
So does it change the Japan trade for you? Does it change the yen trade for you?
No, I think the yen is still going to look weak, and I think what we've seen recently with the yen strengthening against the dollar has just been a correction more so than actual yen strength. I think people were just effectively waiting for that next bout of stimulus, and like I said, we were expecting it to be in the form of increased asset purchase, and this morning instead we've seen a reaction to the increase in this lending scheme.
All right, jumping to this side of the world, there's a lot of UK data out this week. I want to talk a little bit about that. We've got inflation data today, Bank of England minutes tomorrow. I think we've got retail sales as well this week. What are you looking for, and how's Carney going to view this?
Well, I think looking at today, we've got the inflation figures, and I think we're expecting it to stay in line with last month's at 2%, which is a real positive for the UK because it really eases the pressure on the Bank of England to start hiking interest rates, which is something that could potentially choke off what recovery we have seen. And it also continues to close that gap between the inflation rate and the cost and people's wage growth. So I think if we can see it remain around that 2%, it'll be a positive sign. Retail sales on Friday, we're expecting a drop of 0.9%, but when you consider how big the jump in retail sales was in December, that's not necessarily too much of a negative sign. I think what we're really looking for in the minutes tomorrow is to see what the policy makers really see with the UK, what they see as the course for future monetary policy, and how many dissenting voices there were. Of course, when we're looking at the Bank of England, we're regularly looking at those dissenting voices, of which there's been many in the past, and this could give some key clues as to how long we can continue to see these record low interest rates and when we can potentially factor in that first interest rate hike, which some people see as being only later on this year.